Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. Tech is once again dominating the conversation in markets, especially as it relates to AI. In Japan, shares in SoftBank are trading higher on word the company is studying potential acquisitions, including the data center operator Switch. We are told SoftBank has held discussions with leadership at Switch, and the company's been conducting some due diligence on Switch. Stateside, we had some tech weakness. That seemed to be the blemish on an otherwise record-setting session, with the S&P and the Dow Industrial Average each closing at all-time highs. However, the NASDAQ comp was in retreat, thanks to a drop in Oracle. Those shares were down nearly 11% on concern over Oracle's plans for vast capital outlays on AI infrastructure. For a closer look at the price action, I'm joined by Steven Schoenfeld. He is the CEO of MarketVector Indexes. Steven, thank you so much for making time to chat with me. What did you make of the price action today?
It was encouraging despite Oracle's drop and holding the NASDAQ back. I think, there's definitely rotation. Value stocks are strong. Small cap is actually leading. And, we didn't have a record in NASDAQ, but we did in the Dow and S&P. Also, the transports are at new highs. They haven't been in almost 2 years. So it feels like a healthy market. The jitters are mostly in tech, just like you just said with Broadcom.
So are they justified, though? I mean, if you look at what Broadcom had to say, EPS for the quarter was above estimates for the latest quarter. However, the outlook for revenue where AI is concerned maybe did not meet the most lofty expectations. Do we need to discuss valuations here?
I think we can because, tech is still priced to perfection, and U.S. and developed markets in general are very, very highly valued historically, right? So the talking points I sent you, tell the story. Even though emerging markets have had a good year, they're still dramatically cheaper than developed markets. And U.S. is really the tip of the spear of developed market valuations.
So, Steven, if you're optimistic on the U.S. equity market going into the new year, I'm curious about how much of that is predicated on much easier Fed policy. Just the other day, we had the Fed maintaining its outlook for just one rate cut in 2026. That despite the fact that the swaps market is sticking to the bet for 2 rate cuts in the new year. What is your view on the outlook for rates?
I think there'll be a new Fed president, and I think that will have some influence. The market reacted well to it was like a soft hawkish kind of press conference by Powell. So I do think the market will be okay with either. I think the fundamentals of earnings and that the U.S. economy is not as weak as people feared, even as recently as a month ago, is what's holding up the market. You would not see small cap and value performing the way they are. If that wasn't the case.
So you mentioned emerging markets a moment ago. What's your outlook for EM in 2026, broadly speaking?
So obviously emerging markets are heterogeneous. Different markets show greater or less potential, but as a whole, the valuations in emerging markets are really attractive. The forward PE is about half of the U.S. and developed markets. The cyclically adjusted PE or CAPE is also in the 12 to 13 compared to 24, 25 for developed markets. And then you looked at some specific markets. Brazil has performed very well despite being hit with U.S. tariffs. India is one of the few large emerging markets that is flat, and I believe it has huge potential. And Vietnam has had a great year, almost up 50%, but it has a structural change coming up next year. The potential to be not the potential, the reality of being graduated to emerging market status by the FTSE benchmark.
Now, the direction of EM, as we know, often comes down to the relative strength or weakness of the U.S. dollar. Today, it was a story of dollar weakness, and the Bloomberg Dollar Spot Index right now is on pace for its third weekly decline. If we can assume the dollar remains on the back foot, does that necessarily create more bullishness for you when it comes to EM?
Yeah, that is the case. Emerging market performance is generally helped by a weaker dollar, as well as emerging market currencies in general have been strong this year. And we've had a role reversal. The fiscally responsible countries around the world in general, it's more emerging markets than developed markets. So it is the market speaking about the relative health of emerging markets, in my opinion.
What's your biggest concern as we go into 2026?
To start, the geopolitical concerns are not only not diminished, but they've increased. We now have the possibility of a hot war in the Caribbean, as well as continuation of the Ukraine-Russia war. I do expect the Middle East to be somewhat attenuated compared to the last 2 years. I believe the ceasefire will hold, but trade tensions will continue to be a factor. The U.S. and China are seeming to signal mutual understanding and accommodation, so that could be a positive. And it's a midterm election year. There's a lot of unpredictability about that and what the White House will do in order to try to maintain a Republican control of the House and Senate.
So you've highlighted a few of the risks, and given those risks, maybe you could address some of the more defensive or perhaps hedging strategies that you're using right now.
Sure. Well, as a global index provider, we encourage investors to use our indexes and make their own decisions. But what we really strive to do is create asset class choices for our investors. So, for example, gold and gold mining stocks, as well as silver and silver mining stocks, have been an excellent hedge this year. I do think the trends in metals, and now copper's coming up, are going to continue to be of value. In contrast, crypto has not added value to anyone's portfolios this year. It could be a good time to allocate just a few percentage to diversified crypto. And then finally, emerging markets, broadly defined, are definitely a hedge against debt and potential overvaluation in developed markets.
Steve, we'll leave it there. Thank you so much. Steven Schoenfeld is the CEO at MarketVector Indexes, joining us here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. Uber is looking for some new avenues of growth in the Asia Pacific, especially in Japan and Hong Kong. And the focus of the strategy will involve self-driving cars. Uber CEO Dara Khosrowshahi is in the region. He spoke with Bloomberg's Annabelle Droulers.
It's been a very busy week for you.
Yes, it has.
You've been Japan, Korea, Taiwan, Hong Kong. What's been the sort of standout so far, the key takeaways?
Well, the key takeaways for us is growth. The APAC market, and in particular the North Asia markets as well, they are huge growth markets for us. Mm-hmm. And if you look, for example, in the rideshare business, over 30% of our global first trips coming into the category come from the APAC region. Mm-hmm. The area is growing very quickly, including taxi as well, which is actually one of our newest products on the platform. So for me, coming here, seeing the teams, meeting with local business people and regulators, and talking about how we can be part of the future growth of the region is really what my agenda is.
Early this year, you also put out a statement on the robotaxi push as well.
Yes.
And so the Middle East and Asia were the markets for 2025
yes.
to launch. And we've seen, of course, that initial deployment in the Middle East already. What's happening on the Asia side?
Well, lots of discussions on the Asia side. I think what's really important is to set up a regulatory framework to go forward. For example, Hong Kong has various trials and pilots going on, and in many other markets, we're talking to regulators about how we can be a part of shaping rideshare and autonomous rideshare going forward. The technology is absolutely getting there. These are the robot driver. It doesn't get tired, doesn't get distracted, and we very much look forward to working with various authorities to introduce rideshare into the markets. We're now live in 4 markets now, as we speak, in the U.S. And in the Middle East, and I expect to be in 10-plus markets by next year, and we want those markets to be in the Asia-Pacific region as well.
Where then in Asia do you think is the most likely place?
We'll see. I think that certainly Japan has great potential. They are behind
on their regulation.
They are behind on their regulation, but I think that they also understand that with an aging population, there's a real need for transportation, not just in the large cities, but in the rural areas. And for example, I experienced that personally going to Kaga City, and where we have communal rideshare, and kind of took a rideshare trip and understood what the needs are there. So we're talking with various countries, regulatory authorities. I think Japan is going to be part of it. I certainly hope that Hong Kong is going to be a part of it. Australia, where we were just talking about, is a huge market for us. So we're having those dialogues, and I think that the picture will shape up over the next 2 years because the technology is definitely getting there.
Speaking of Hong Kong, because we do see the trials that are underway, and they're being conducted by Baidu's Apollo Go program. Would you be looking to work with them on that, or are you working with them on that? Baidu is a partner of ours, so we partner with Baidu. We're in WeRide, for example, in Abu Dhabi and expanding there. Pony's another partner of ours. So we absolutely expect to be on the road with all 3 of them. When you look at Chinese autonomous technology and the development there, they are one of the leaders on a global basis. And for us, we want to partner with the whole autonomous ecosystem to bring this technology to reality. So just to clarify, you're expecting to ramp up the markets that you're in to 10 autonomous driving markets. 10 plus, yes. By next year. Yes. And you anticipate that those could also come from the Asia region? They could come from the Asia region, and they could also involve some of the partners that we talked about, Baidu, WeRide, and Pony. And where, if not Hong Kong, then where else do you think? And Japan, as I said, it really is behind on the regulatory side. In every major market in which we operate, we are having discussions with autonomous partners, and then most importantly, regulators, as to how we can introduce autonomous, either in a pilot way or within some restricted operational domain. Everyone wants this product. It's a product that's delightful. In markets, for example, in Atlanta, in Austin, and Abu Dhabi, our consumers love the product. They feel safe. And this technology is hitting prime time now, and every major city in the world wants to be a part of that revolution. I do find it interesting on Baidu in particular with the Apollo Go program, because they are conducting the trials here. They're already starting to remove the human drivers across some of their markets in mainland China. And the way that you can get a Baidu Apollo Go ride in mainland China is often through a Baidu-controlled platform. Do you see that risk of them maybe pursuing that strategy here instead of teaming up with you on it? I don't think it's going to be black and white in terms of the strategy. I think that there could be many hybrid approaches. And I compare it to the food delivery business. For example, we work with Starbucks or McDonald's that has a direct app, and customers go direct to get the food there. At the same time, they also participate in the marketplace. So I think the autonomous ecosystem will be the same way. There will be some direct some customers going direct, and we think that with the Uber marketplace, we can bring the kind of demand that over 200 million monthly active platform customers can bring to autonomous, so that we get those cars on the road and incredibly busy with very high utilization. Let's talk about the US as well, because you're partnering there with Waymo as well.
Yes.
In certain cities.
Terrific partner.
Yeah, terrific partner.
Yeah.
Actually, in the latest earnings, I think you said excellent as well. But in some places, Waymo is expanding into new cities without you and becoming a direct competitor. And that's something that was highlighted even by Wedbush earlier this week as being a potential risk for your business next year. How are you assessing that?
Well, I think it's the same example that I gave you, that in some ways the McDonald's app is a competitor to Uber Eats. And the two can coexist. And it's very, very early in the development of autonomous. We have to make sure that we have access to autonomous technology in the major cities that have the right regulatory frameworks to allow autonomous. And we're very confident as we look at our roadmap and we look at our partners. We have over 20 partners, autonomous partners globally, that we will have access to autonomous technologies in the large cities and markets that really count.
When you say access to 20 different partners, do you think that that is the way that the industry will continue to evolve, or do you expect consolidation on the robotaxi side as well, or the autonomous driving software side?
What we're seeing is this is $1 trillion plus market in terms of autonomous mobility. I think delivery eventually will be of a similar size. And when you have markets that are that large, you usually don't have winner-take-alls. It's the same way with these LLM models. There are many to choose from, whether it's an OpenAI or Gemini, and I think the same will be true of autonomous. It's an exciting technology, but there are many players getting to the finish line. We just have to make sure that the players that we work with are safe, and that, again, we're working with the regulators in a constructive manner.
Part of the strength of Uber, of course, is your data moat and just how much information you're collecting on users and the rides they're taking and their behavioral patterns. But other competitors in the market, like Waymo or like Tesla, are still continuing to build up that infrastructure as well. So how secure do you see that data moat being?
Well, there's nothing secure about the technology space. There's always innovation. And so we just have to move fast. And I'd say actually the more important factor in Uber is our global coverage. We operate in 70 countries. The demand that we're bringing every day, we've got millions of consumers opening our app all over the world. And we can point that demand not just to our current driver partners and delivery partners, but as autonomous comes in, to autonomous partners. You know, these are very expensive cars. It's a very expensive technology, and you want to amortize the upfront spend against as many transactions as possible. And Uber certainly is the leader around the world in terms of the demand that we can point to our autonomous partners.
Yeah, when you talk about capital and just general capital raising plans, an interesting move that you made earlier this year was raising $1.2 billion by selling those exchangeable senior bonds linked to your stake in Aurora. A few details on that one. But do you see yourself doing that again in 2026? Something similar again, just to it was really seen as an innovative and creative way, I guess, to raise money.
Well, we have a very creative team. I think the good news for us is we're now free cash flowing close to $10 billion, and we expect that to increase substantially over the next couple of years. So through a combination of the substantial free cash flow that we have and also monetizing some of the equity stakes that we have in other companies, now it's over $10 billion, we think we have plenty of capital to be able to continue to invest in our autonomous technology partners or building out a fleet presence and or vehicles across the autonomous ecosystem so that we can continue to be a leader in the space.
You're well capitalized. That's what I'm taking away from that. But would you look to do something similar with your stakes in Didi and Grab in particular?
I think we'll be opportunistic, certainly. We love Grab, and it's a strategic partner of ours. Didi, of course, hasn't gone public yet. So to the extent we have an opportunity, we will look to, we call it recycling the investments that we've made. But at the same time, we don't need to do that because the company continues to throw off cash flow. We have a lot of options ahead of us.
I want to talk about also the sparser geographies strategy and the importance of that. Can you maybe spell it out a little bit for people exactly what you mean by that? Because it is interesting as you make sort of a push into lots of different centers, it actually seems to be less the urban centers that are doing well for you as a company.
Well, the urban centers continue to grow, but I do think that as I reflect on Uber's growth, we used to be a big city company. And what we're seeing is there's enormous demand for both mobility and delivery outside of the large cities, in the more sparse markets, the suburbs, et cetera. And our growth in the sparse markets is anywhere from 2 to 3 times faster for mobility and delivery than in the big urban markets, even though the urban markets are growing. At the same time, some governments actually need access to mobility. There isn't great taxi service in some of these rural destinations. In Japan, bus services is also not readily available. So, as Uber, obviously we run a business, but we want to be there for our stakeholders, and we want to help address some of the needs of the government. In Japan in particular, rural transportation is a real need, and we wanted to step up and give back to Japanese society because that market has been such a great market for us. And that's what communal rideshare in these rural destinations like Kaga City is all about. I experienced it myself. The countryside is absolutely beautiful, and our driver was so thankful. He actually runs a soba shop that's on Uber Eats as well. He delivers for Uber Eats. He's a part of our ecosystem, and it's amazing to see that happen, not just in the big cities, but also in a lot of small cities and rural destinations.
What do you make then for India in particular? Because, of course, your big competitor there is Rapido, and they've been very successful with a slightly different operating model, but including going down into lower tier or smaller tier cities. How do you also stay competitive there? And does that sparser geography strategy also fit for India? Yeah,
very much so. So with India, really, the fastest growing part of the Indian market is two-wheelers and three-wheelers. And the business model is different, actually. It's not a commission model, but it's actually a subscription model as well. Rapido is a real upstart there, but over the past months, we've been pushing back against them. And India continues to be a hugely promising market for us. So we're very happy about the recent results that we're seeing.
That is Uber CEO Dara Khosrowshahi speaking with Bloomberg's Annabelle Droulers in Hong Kong here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.